reality is that the first 6 months of the financial year were tough in terms of commodity prices. We took a large hit, as you spoke about. What I would say, though, interesting enough, over the last 2 months, we have actually seen our prices increase and go higher again. Some of that obviously driven by, if you like, the resolution of the trade war or the stage one. Some of that also driven by the fundamental supply demand of our products. But the interesting piece is, while we talk about the coronavirus, it's important to understand, while it's not certainly clear what's going to happen, it isn't linear for every single commodity in terms of how it's playing out in China. For some of our commodities, we're actually seeing an increased demand as they have to rely more on imported material rather than their domestic production.
Okay. Right, but wouldn't matters get worse from here, Graham? I know you're talking about alumina imports rising despite the coronavirus outbreak, but for metals such as copper, aluminium, those prices have taken a nosedive on the back of disruption in demand. Wouldn't that counterbalance and make things a little more challenging going ahead into the second half?
So we probably sell about 22% of our product into China, if you look at it on a revenue basis for the half year, which by far the biggest exposures for us are met coal and manganese ore. And both of those, I guess, have seen that positive impact where domestic production has actually retreated. And as a consequence, they've needed to absorb more, if you like, export or more seaborne ore into their marketplace. So that's been positive for those two prices. I think if you think about the medium to long term, there are also two commodities which will be hugely dependent on what China decides to do around steel production coming out of the Chinese New Year, but both have some attractive elements in terms of supply disruptions that I think will also put some upward pressure on price. Now, the big challenge is, when does that price turn and how long does it last for, and does the Chinese government do a fiscal stimulus?
What can you tell us about the newly formed joint venture with Trilogy Metals? It's a 50-50 joint venture. How much are you putting in, and what are the kind of expected returns that can come by from this JV?
Yeah, look, one of the things I think the team's done a really good job on the last 3 years is to bring development options in the South32, such as Hermosa, Eagle Downs. The joint venture with Trilogy, which is Ampler Metals, is just another good example of that. We've been working together for 3 years on an exploration deal. And as part of the joint venture, we bring in essentially two deposits, one called Arctic, which is a polymetallic deposit, and a large bornite copper deposit. Both of those projects are in early stages and need more work around drilling to understand the full extent of the ore body. As part of that joint venture, we also bring in a large district called the Ambler District of Alaska, which is relatively unexplored, which we think is also attractive for potential of copper deposits. And in terms of funding going forward, as part of the subscription price, that essentially pays, if you like, for the exploration programs and study works for the next 3 to 4 years.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.